It has been a volatile year, David, but mostly everything heading up. An extraordinary year. Everyone knows stocks are on a tear. What they might not know is that investment-grade bonds are up 7%, high yields up 6.5%, even triple Cs are in the black. How should an investor reallocate now?
Well, Eric, the dominant theme right now is the broad consensus that interest rates are going to stay low and low for a long time. In fact, it's never been more punitive to hold cash. And what that's doing is it's driving people out of cash and into almost anything that they see as a yield. As you point out, we've seen dramatic flows into all kinds of credit products, into emerging markets, into high yield, and also into the equity markets where we've seen a real run up as well. So I think you can see this hunt for yield really on steroids during 2021. And I don't see an end to that in sight as long as there is this broad consensus on rates.
Now, if there's a hunt for yield, David, it goes down that cascade of the capital structure. Does that mean in your mind that equities are going to have another extraordinary year and everything else with, some kind of risky flavor to it, whether it be, mezzanine debt, whether it be, preferred equity, also enjoys incredible gains?
Well, we do believe that risk assets are going to have a good year. We think that the money that we've put to work over the last 6 months, when you look at it over the long run, will have had an extraordinarily strong vintage. And we believe that the next 12 months will be very strong as well. Now, that is, of course, counting on the fact that we will have a vaccine that is broadly available and that the global economy will gradually recover in the second half of next year. Just to give you some sense of that, I mean, our numbers are that the U.S. economy basically shrank by almost 4% this year, but it'll grow by 4.5% next year. So we'll have pretty much of a recovery by the end of next year in terms of broad GDP growth. And that gives you a pretty powerful backdrop to be constructive on risk assets.